320 requirement 4 asks us to prepare the actual documents that we would deliver to a client, not the worksheets and things that we do in the back room. So the first thing it asks us to do is to do an income statement. Referring back to the trial balance, I'm going to pick up the revenue and the expense accounts. I've got one revenue account and 3 expense accounts. So I've got 70 in revenue, 27 in salaries, 3 in rent, and 25 in supply expense. I'm going to transfer that to a formal document called the income statement, and it looks like that. Now, remember, this $15,000 belongs to the shareholders. That goes to retained earnings. The next statement it asks us to do is the statement of retained earnings. So we're going to start out, or the statement of stockholders' equity to be more exact. We're going to start with the statement of shareholders' equity, and we're going to start by putting in the balances that they gave us. So the opening balance at the beginning of the year, we had $50,000 in common stock. We had $25,000 in retained earnings, meaning our total equity at the beginning of the year was $75,000. Now, during the year, we issued some common stock. We issued $20,000 in common stock, so that increases our total shareholder equity. Furthermore, we had some income. We had $15,000 in income. That too increases total shareholder equity. Now, because we're nice guys and don't want to seem greedy, we gave $2,000 in dividends back to our shareholders. That reduces our total stockholder equity. Now we're just going to go through and we're going to add up those numbers and see where we end up. So we have $70,000 total year-end common stock. 25 plus 15 is 40, minus 2, 38,000 in retained earnings at year-end. And our total shareholder equity, 75, 90, 110, minus 2, 108. So whether you add this way or this way, you come up with 108,000. Now, our last statement that we need to do, the last formal document that we have to give to the investing public, file with the shareholders and the SEC and all that, is the balance sheet. It's the third or fourth required statements. The other required statement, the fourth, is statement of cash flows, which we're not doing this chapter. We'll get to that soon enough. And we're just going to go back to our adjusted trial balance, and we're going to pick up those numbers. Now remember, these have already been closed to retained earnings, so we have to make sure we account for those adjustments. So we're going to go back to that. And we may also need to go to all of our T accounts just to double check in case we're not sure. But I think we have everything on our adjusted trial balance, so we're good to go. So we have $30,000 in cash, and strictly by luck, we have $30,000 in accounts receivable. Those numbers are not related. Now keep in mind, this is a formal accounting document, so we're not using debits and credits. We have $7,000 or $5,000 in supplies, excuse me, I can't read my own notes. And our prepaid rent after the $3,000 adjustment is $9,000. So our total current assets are $74,000. We have one long-term asset, that's land, for $60,000. So our total assets are $134,000. Now we're going to come down the liability side. We have our accounts payable from when we bought supplies, $22,000. We have our salaries payable, the year-end adjustment of $4,000 that we're going to be paying our employees next year. So our total current liabilities are $26,000. Our common stock from our statement of shareholder equity that we just did is $70,000. And we have our retained earnings, and I have to check that number because I don't have it memorized. Our retained earnings was $38,000. So our total stockholders' equity is $108,000. And these two together equal $134,000. Our balance sheet does indeed balance at $134,000.